And earnings are still rolling in. And now we see some disappointing earnings. But we also identified 3 possible trades. 2 of them earnings plays. So we'll talk about those if you want, and then also what's happening in the markets. We are here live from Cayman Island. And if you're wondering, this is Coffee with Markus and Mark. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. If this is your first time here, I'm Markus Heitkoetter. This is my coach, Mark Hodge. We are real traders who trade live accounts. So therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're here looking for some honest insights into the fascinating world of trading and want a few trading tips, you are in the right place.
You are.
Good. And markets are kind of crazy. Actually, let's start and look at earnings first. So we had Procter & Gamble reporting earnings. We had Morgan Stanley reporting earnings. And then after the bell today, Tesla and Netflix. These are the big ones for today.
Exactly. And so heading into today's session, yesterday we actually had a pretty quiet end of the day where the S&P just barely lower, the Dow up a little bit, the NASDAQ, I'm banging on the table because I like it. The little things that are different in a live setting. It's a live setting anyway, but it's live in Cayman. Okay, sorry about that. No more banging. That was me. And it's funny because I joked about banging before, and then I kept with it. Yeah. Okay. So, hey, crazy ass markets. So, quiet going into today's session, but we did start lower. Earnings season completely in the spotlight this week. And like you said, Marcus, there are a couple of biggies after the bell, but there are still a lot of movement today.
Yeah, let's actually start with United Airlines reporting earnings after the bell yesterday. Earnings came in better than expected, but they provided lower guidance and said these high fuel costs, they're hurting us. So as you can see, 8% higher profits, pretty good in revenue, but down almost 9%.
Sure, because it was higher fuel costs, but then also the impact of the Israel-Hamas war, saying that that's going to affect their next quarter.
It's super interesting because last week we had Delta reporting earnings, and Delta did not mention anything like this. Today they're also dragged down 4% because everybody says, well, if United has these problems, most probably Delta has these problems as well.
Exactly.
But when they reported earnings last week, they didn't mention anything about that. They didn't even mention anything about the war because it hasn't happened. Oh, it has, yeah.
It did, but maybe the impact of it they were waiting to see. But so it was addressed with UAL earnings, and they were down 4% overnight. That's UAL, but double now.
Yeah. All right, and then we had Morgan Stanley reporting earnings, and they are down 7.5%.
Look at this. Yeah, their wealth management results disappointing, headed for their worst day in 3 years.
Yeah, and it's quite interesting because when you look into this, so the trading operations helped offset. So bond traders, around $2 billion in revenue. Then we had the equity traders, $2.5 billion. But then wealth management generated $6.4 billion, $200 million less. What's $200 million?
Yeah, is that a 7% correction?
I don't know. 7% down based on this. So quite interesting. However, overall, the profits fell 9%. So that's probably why. Okay.
Sure. So opening lower, getting worse on Morgan Stanley.
Yeah. All right. Who else? PG, Procter & Gamble. If you take a look at that one, let's actually bring it up here. Procter & Gamble up 2.5%.
Nice. They had an earnings beat, also beating on revenue.
Yeah. So, and this is where we talked about it. This week, we have around 10% of the S&P 500 companies reporting earnings, but it has been kind of a mixed bag, right? First we had JP Morgan earnings, and they came out better than expected. Then we had Goldman Sachs, pretty much in line, but then today, Morgan Stanley down. So it's kind of that traders are trying to figure out, okay, what's the overall picture here?
Sure, and I saw that FactSet, they did say that earnings have been 78% of earnings reported have been better than expected, but we also have really lowered the bar going into this quarter. So because of the guidance from last quarter, the numbers just aren't expected. Like an earnings beat is easy. Let's put it that way.
Yeah. It's easy. And also, if you see, I mean, last week we kicked it off with 12 stocks. This week, 55 stocks, as we said, 11% of the S&P 500. The next 2 weeks will be super busy.
Exactly.
And this is where right now traders trying to identify, hey, what's everybody else doing? And this is where the markets right now say, well, we don't know yet. Because if you take a look at the S&P 500 today, I mean, this morning in the session, it was all over the place, moving a little bit lower right now, bouncing back. And there's just a lot of indecision here in the markets.
Exactly. So some volatility kicking in, and like you said earlier, Netflix, Tesla in the spotlight after the bell.
And I don't think that the markets will move dramatically until we have these earnings, right? I mean, we see that the VIX is up today 6%, but it is in the 16 to 20 range that we have been trading for the past few weeks. Interesting here, yields are higher again.
Okay, but yeah, you're right. The 10-year yield creeping higher. When we were opening, it looked like yields were pretty quiet, and then crude oil was quiet too. But we're starting to see a little bit of a shift there.
Yeah. So here the 10 yield rising quicker than the 2-year yield, and that's what we want to see because eventually this number needs to be higher than that number. I mean, this is the inversion, the yield inversion that everybody was talking to, and we need to go back to normal.
Yeah, and on one hand, interest rates staying higher longer isn't the best thing, or yields. But at the same time, the inversion is typically a sign of a recession, and there's been talk about that. I mean, at this point in time, everybody's saying, either no recession or a mild, not a major thing, but that inversion in the past has been a sign.
Yeah, I mean, especially the mild recession with the data that we are seeing. I mean, for retail sales yesterday and retail sales better than expected. Today, we also had some economic reports. We had some economic reports from the housing market. I mean, orange flag, not a whole lot. And honestly, I'm not surprised. Building permits pretty much in line with expectations. Housing starts lower. No surprise. We heard yesterday that mortgage demand is on the slowest level since 1995.
Yeah, and so the reaction an hour before U.S. markets opened up, a tiny bit of a drop, but then snapped back a couple minutes later. So it wasn't a big reaction there.
Yeah. Hey, when was Fed member Harker speaking? He was speaking yesterday?
I think so.
Okay. Because this is where we also have a ton of Fed members speaking, and this is where we hear from Fed members that they are thinking, okay, we're kind of done raising interest rates, especially since the market seems to do the job for them. I mean, if you think about it, since May, the Fed had raised interest rates only 0.25%. So, however, if you look at this, I mean, here it has gone up by almost 50%, the 10-year yield, in the same time period. So right now, the markets are basically catching up and doing the job for the Fed.
And that's where I'm actually surprised that the probabilities for December are as high as they are for another quarter point. I know that's what the Fed has said, but to combat inflation, the Fed is raising rates, and now we're starting to see, like you said, the longer dated interest rates or yields creeping up and doing the work.
Right. So basically, traders, I mean, it was at 92%, has gone down to 86%, the probability.
December changed today because it was about 55, 45, I think. And so that popped up again.
Yeah. So again, thinking that the Fed will not raise interest rates, but there's still a good probability that traders say, well, they might have to do it because we see that the economy is still strong, what the Fed doesn't want to see. But we also see that interest rates are going up.
Yep.
All right. We promised you that we'll talk about a few trades that we identified. If you're interested in those trades, do us a favor. Give us a like. We are trading likes for trades.
Sure.
Because we're traders.
Why not?
Okay. Let's talk about the first one. And pretty much all of them are earnings plays.
Yes, a reaction either to today or to yesterday. And we could start with.
Why don't we start with our positions and then we talk about the
That
trades?
works.
Let's do that. So CSIQ, our first position here that we have had for a while. CSIQ camping out at this lower level here. And this is where if we remain there for a few more days, maybe next week, the week after, we're looking at a possible rescue mission here. So, I mean, mixed feelings. On the one hand, we want it to go up. On the other hand, we like that it is stabilizing. I mean, the 21 strike price has become available quite a few times right now. And I think this would be a really good level for a rescue mission, 21, 21.50.
And that's the thing. Of course, a V-shaped recovery is ideal where you have an overreaction. It just takes off and moves higher, right? But the second best thing is where you start to see it stabilize, where there's just some indecision and buying and selling, but no real direction, because you don't want that sell-off to continue. So it does look like we could start to see support here.
All right. So, I mean, talking about a V-shaped recovery, this is almost what we have in NEE. And I mean, today, overall weakness in the markets, NEE hanging in there, down 1%. But after this this massive move up, stabilizing there. And I believe that once we break through the 56 level, that the next level might be around 60.
Yeah, this is a bit of a surprise to me because I actually thought we'd see some more movement and volatility in CSIQ. But with NEE, that is a nice little bounce. And so with CSIQ, you have this move lower, consolidation, move lower, and now some support. Here you just have that quick drop over reaction and a bounce, which is nice.
Yeah. All right, PNC, next on the list here, today down, probably being dragged down a little bit by Goldman Sachs, right? That's down 7%. Because if you look at the heat map and we look at the financials, this is where we kind of see that overall the financial sector is down. Asset management, if you look here, for example, Blackstone or Morgan Stanley, Goldman Sachs, Schwab, they're down. And this is also then dragging down the regional banks here. USB down 3.8%.
Exactly.
PNC, right? I mean, that's kind of in line what we see here. So not too surprising, not really what we want to see, but I mean, also not too much of a surprise today.
Sure.
All right, UPS, this will be an interesting one. UPS, I own shares at 157.50, trading nicely in a range here. I sold the 157 calls, and right now it seems that I might be able to buy them back at 80% and then do the same thing again next week.
That'd be nice. That'd be nice. And again, I'm looking for a break to the upside. We are in this range, pulling back to the middle part of that range. So chart-wise, I mean, it's not a concern to me, but would definitely like to see this break.
It's super interesting that it really has found support right there at 157.50.
Yep.
Resistance, right?
Yep.
And support we see here at 152.50. So we're trading in a $5 range.
Exactly.
I mean, I'm with you. This to me looks definitely more like upward pressure that will break out to the upside here, and then we should be good to go.
That's the plan.
All right. Now we got to talk about our IWM trade that we took on Monday. On IWM, we sold the 169 puts. And then yesterday, we had this here really nice pop.
Exactly. So my plan, buy it back in one day if I could get 80% of its max profit. And after we wrapped up the show, I was filled.
We got filled.
Yep.
Right. So, and this is where we did something super odd. Not really, but it's kind of like, what? So let's talk about Goldman Sachs. If you recall, Goldman Sachs, you were assigned at 312.50.
Yep.
So first you sold put, you got assigned, you sold calls against it, and then these calls expired worthless last week. So on Monday you had the shares, and you decided, let's just sell it.
Exactly. We had earnings Tuesday before the bell. I was able to close those shares at 313.18, make some profit there in addition to all of the premium collected. This kept me out of Goldman Sachs, so I didn't have that earnings risk exposure. And then one nice thing about getting out of the trade is if there is an opportunity after earnings, you could take it. And that's what I did.
That's what we did yesterday.
Yep.
So we took the 305. We sold the 305 put. So super interesting. On Monday, you got out of this, got into IWM. Yesterday, on Tuesday, got out of IWM. Wednesday, back into Goldman.
Exactly. but now the potential to get in at $7.50 better if we get a sign. But of course, the week is not over.
Yeah, exactly. And today, Goldman Sachs also being dragged down by Morgan Stanley. So here, I mean, holding up only down 1.7%, but with the overall weakness in the financial sector, not too surprising. So that's one of the trades, and it's still available right now, even at lower strike price. I'm happy with the 305. I wouldn't mind get assigned here than selling calls against it.
Oh, sure. I think we have some nice support between 300, 315-ish, and that lower 305 range is nice.
All right, good. So we do have 2 more trades for you if you want. If you want these trades, give us a like. Right now, we're counting the likes. So we want to see at least 100 likes. Right now, while we are live, and overall, we want to see 300 likes. And this is how we share a few more trades. And both of them are kind of earnings trades. And the first is Morgan Stanley.
Yeah. So as mentioned, Morgan Stanley on pace for its worst day in 3 years. Now, with that move lower, that volatility is giving or being priced into those options, and we could potentially sell the 72 strike.
Right. And I mean, this is at very nice support here.
Yep.
If you look at it now, we're already full, and
Exactly.
we're also in Goldman. There's a high correlation between Morgan Stanley and Goldman Sachs. So that's why we decided to pass on it. But I mean, it's there if you like Morgan Stanley at 72. I think this is a great opportunity. The other one kind of seems like a delayed reaction.
Yeah, so we have J&J as an alternative, reporting earnings yesterday, I think it was.
Yep. Yeah, they reported earnings yesterday, but then we see that today there's a reaction to the downside. So right now there's no options found. A little bit earlier, we saw that the 152.50 or even the 150 is possibly available here, which is some nice support for Johnson & Johnson, I believe.
Sure. So I think a decent alternative to MS and two to consider.
All right. Well, let's take a look at the markets here and see what's happening. And if you're enjoying this so far, do us a favor and click like. Or even better, share this video with somebody. And let's see what is happening here right now, a 5-minute chart of the S&P 500. And again, the S&P 500 right now is trying to figure out what to do. If you look at a daily chart, we are in this range here, in a very narrow range, where the S&P right now is trying to figure out, okay, do we believe that all of these earnings are good? And then I believe we can crack 4,500 again. Well, we go to 4,600 now, but there's a possibility to move higher here. And of course, we have the Fed meeting coming up in 2 weeks from now.
Absolutely.
So looking at a 5-minute chart or overall, the indices, that NASDAQ is leading the way lower, probably being fueled by Nvidia. Just go there and go to the NASDAQ. Oops, not technology. Oh, we can go to all. Right, I mean, this is where Nvidia and AMD still down, and they were already down yesterday after the announcement from the U.S. Department of Commerce.
Yep. So down over 3%, Nvidia, and ASML reported earnings too, down about 3%, but it seems to be just kind of in line with what we're seeing.
Yeah. And then today we have Tesla and Netflix reporting, both lower going into earnings. Tesla lower than the average market, so a little bit weaker here. Let's see if Tesla can pop or disappoints. Same with Netflix.
Yeah, I'd love to see a little bit of a positive reaction. I think that could get the markets headed north.
Yeah. Hey, we'll definitely be back here reporting tomorrow. And if you enjoyed the show, you know the drill. Click on like. If you're new here, click on subscribe. Hit the little notification bell. This way you get notified tomorrow when we go live. And again, we enjoyed and like it if you're sharing this video with others who might benefit from this video. And we'll see you again tomorrow.
Happy trading, everybody.
You want to bang the table? Just for good measure. There we go.